Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock and what we can anticipate for the future stock price appreciation regarding the PLTR stock after their Q2 earnings report, which will be announced on August 8th. In this video, we're going to be going over their newest price targets, their latest news updates, as well as some internal developments from within the company where a former DoD Pentagon worker will actually be consulting Palantir on their overall government clientele. We're also going to talk about how the PLTR stock could potentially either gain or dip after the earnings report in their share price, and then lastly, we're going to be going over our final thoughts to determine where the Palantir stock price is headed after and before their earnings report. So for more videos like this one, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's just jump right into today's stories. So Palantir, if you didn't know, is a big data and analytics company that interprets large data sets so they can give useful information to that company or organization's management to make data-driven critical decisions. The PLTR stock right now trades for about $11.30. However, according to analysts, some analysts think that the PLTR stock will fall to around $6 within the next 12 months, while other very bullish analysts think that the company is going to surge up to $20 over the next 12 months. So let's see if these price predictions are actually going to be accurate from my personal opinion. The PLTR stock has done very well lately, surging by around 15% during the last month. However, recently, the investment firm RBC recently issued a statement saying that Palantir's government spending and their government clientele has been quite disappointing, and that will result in less than impressive revenues from their government segment of their business. Clearly, this would be very bad for Palantir Technologies because not only does their government revenue make up the majority of their revenue, but this is also going to negatively impact their Q2 results. This analyst goes on to say that he has a $6 price target for this particular company, and that Palantir has been obtaining new government deals but at a much slower rate. For instance, he says that Palantir landed around $25 million worth of government contracts in the Q2, and that would equate to around an 81% decrease year over year. The analyst goes on to say, and I quote, "While this is disappointing to us regardless, we would point out Palantir's intra-quarter announcements, which suggest some expansion activity, including two-year $100 million contract with the U.S. Army on July 28th, a 14-month $36 million contract with the U.S. Army for Titan on June 28th, a one-year $54 million expansion with the USSC BMC-3 on June 2nd, and a five-year $90 million contract with the Department of Health and Human Services on May." End quote. So despite that, they are still technically landing government contracts, very lucrative contracts in my personal opinion. However, this does indicate a slowdown in their government business, and I don't think investors are going to be very happy about this. The analyst goes on to point out that their commercial business is also slightly suffering, and this is huge news because in my personal opinion, I think that their commercial segment and their commercial business will eventually surpass the amount of revenue that they are gaining from their government business, and I think this is what's going to turn the company profitable in 2025. But because both their commercial business and their government segment are both being hit hard lately, this could cause the company to release less than ideal earnings results and revenue metrics for Q2 and or Q3. Right now, for the full year of 2022, the consensus estimates, according to analysts, still say that the company is going to bring in around 15 to 16 cents per share for their earnings per share, or EPS, and around $1.98 billion worth of revenue, which is honestly not that bad. I'd also like to point out that last month, which this article correctly highlights, that the U.S. Army Research Lab actually expanded their existing relationship and contract with Palantir Technologies by another 2 years, which was extremely profitable. Now, the good thing about this particular setup is that Palantir sees that their government clientele is lacking right now, which is why they're bringing in an ex-Department of Defense Chief Data Officer named David Spurk to act as a consultant for Palantir Technologies. David Spurk will now act as a senior counselor to Palantir, and he left the Pentagon back in March, and he will now now advise Palantir to grow and how to grow and establish more of a relationship with their government clients and hopefully expand their international business as well. This former Pentagon employee is very prestigious as he led the Pentagon's data management efforts, and hopefully he will be utilized by Palantir Technologies where he can implement his various data strategies. The article actually quotes David when he says, and I quote, "There are other near-peer competitors who are paying attention right now and understand these technologies. If we don't pick up our pace and continue prioritizing moving forwards that open data standard architecture that those data decrees described, then we will fall off pace." End quote. And I 100% agree with him. He really wants to utilize Palantir's current competitive advantage in the market to continuously grow their government clients and hopefully maintain that relationship for a lifetime so Palantir can reach their goal of becoming the #1 default operating system for the US government. So even if Palantir brings in less than expected revenues from their government clientele, at least we know that they have a plan to eventually kickstart their revenues and relationships back up in terms of their government business. I also want to hone in on the fact that over the past month, Palantir has been outperforming the broader stock market benchmark, which we will say is the S&P 500, which has gained around 8.35% during the last month, while Palantir, depending on what source you use, has gained anywhere between 11.65% to 15% over the last month. To me, this is very positive because it's investors coming back into the company and buying up the stock because Palantir has started to display some strength during this time of major stock market volatility and economic uncertainty. However, for Palantir's Q2 results, ideally we would want them to beat their earnings per share of 3 cents, because if not, that's going to represent around a 25% downside from last year regarding the same quarterly report. Also, they are estimated to bring in revenues of around $471.53 million, which is up 25.53%. However, even this is pretty bearish because this does not meet their 30% compounding annual growth rate, which management promised to their investors. So in a perfect world, we want them to beat on their EPS and their revenues. However, for me personally, I think they are going to bring in around a 2 to 3 cent EPS, but I think they are going to beat on their revenues by bringing in over $471.53 million. So we will find that out on August 8th when they actually release their Q2 earnings report, but I want investors to actually hold on because this could negatively impact the PLTR stock price. Another reason why I think that the PLTR stock price could actually experience a correction after the earnings report, which would mean that the PLTR stock price is going to fall after the earnings report potentially, is because according to current valuation metrics, their price to earnings ratio is around 67.5, which is rather high. And the reason why we know this is rather high is because we can compare it with their overall industry, and their specific industry has an average forward PE ratio of around 24.15. So literally Palantir is trading at over 2 times their industry's PE ratio, which is really not that positive. This indicates that Palantir Technologies is clearly trading at a premium based off of its current stock price of around $11.30. Now, I do want to say that it's not too bad because if we look at Palantir's PEG ratio, which is currently 2.18, this is a metric that is similar to the price to earnings ratio. However, the main difference is that the PEG ratio or the PEG ratio actually takes into consideration the company's expected earnings growth rate. So to me, it's a more accurate prediction if they can follow their current growth trajectory. So clearly the PEG ratio or the PEG ratio is substantially more positive instead of looking at just the PE ratio. And just like the PE ratio, we can compare the PEG ratio of Palantir to their overall industry. And right now, for the technology services stocks, the average on the PEG ratio is about 2.18 right now. So literally they just break even on this particular point, but that still does indicate that Palantir Technologies is trading at a slight premium. So ideally, you would want an average cost basis for Palantir Technologies that is at or below $8 or in a perfect scenario, around $6 to $7. If your cost basis is not that low, then you may just want to hold for the next few years or hold through the next couple earnings reports. The reason why you might want to do this is because Palantir, based on future projections, is set to stabilize their stock for the next 2 to 3 years to when the company eventually becomes profitable in 2025, and that's when the company's going to start ramping up their stock price again. So some investors are deciding to not invest now and only invest after the company becomes profitable, or maybe right before the company becomes profitable in 2025, and then other investors are holding on to their current shares and not buying any more until that point. But again, this is all up to you. This is going to depend on your personal risk tolerance and your investing strategy. Now, the positive part of Palantir Technologies that I want to point out is that the company has dropped and lost around 62% of its value since their 52-week highs, which does indicate that this company is trading at a substantial discount from what it was previously trading at. I also want to point out that the stock is trading at around 14 times their 12-month sales, which is not terrible, but I would not buy Palantir unless the PS ratio dropped below 10 times, which it was literally just last month. But with that out of the way, I do want to reiterate that I personally, as well as the author of this article, anticipate that Palantir is going to continuously grow rapidly over the next 2 to 3 years, and I do believe they are going to achieve that CAGR, or compounding annual growth rate, in regards to the revenue of 30% or more year over year. The author of this article also recommends that investors remain vigilant and up to date on this particular stock so they can adjust their holdings accordingly in regards to their quarter 2 and their quarter 3 earnings report, which we have yet to see as of right now. And then lastly, we want to make sure that Palantir is not succumbing to the macroeconomic pressure that is happening right now and the threat of a full-on recession. Clearly, if the economy enters a recession, this is going to cause investors to liquidate their growth companies and flood into value stocks more than they have already done, so we really need to keep that risk in the back of our mind. But again, always make sure to do your own research, smash that like button for more videos like this one, subscribe if you are new, comment down below how you think the PLTR stock is going to react after their earnings report. I think the stock price is going to fall, and I only think that they're going to beat on revenues and not their earnings per share, but we're going to have to wait and see. And with that being said, I will see you in the next YT video.